Hi guys, this is Slim Fizzy. Welcome to my channel. Today's video I quickly want to show you guys the trade that I took on gold and GBP USD. This trade was very effective, and I make each profit with the trade. So I quickly want to show you guys how I did everything, just to enlighten you guys on how you can trade this GBP USD and gold. If you are this is new channel, do me a favor by subscribe to the channel, like this video, and also on post notifications. So that I post a strategy, you'll be surely notified. I will be creating a lot of video on this GBP USD and then gold. I'll be creating a lot of video, a lot of strategy, a lot of signals, and a lot of techniques, skills you can use to trade this market effectively to become a successful, to become profitable trader, not just a profitable trader, but a consistent profitable trader trading this GBP USD and gold. So without wasting most of our time, let's quickly dive into the trade. Now you can see something right here. What you can see, I took the trade in New York coupon. So I took it on New York coupon. This is it. The first thing I do is I switch my time frame. We'll be using I'm a day trader, so I use my 4 hours, 1 hour and 15 minutes for my entries. So I quickly switch my 15-minute time frame before the New York open. So I switch my 15-minute time frame to do my analytics and figure out that the market is the market literally break all this eye right here. The market got to break all this eye right here. You can see the market break all those eyes. All those eyes you are seeing here, the market break it. So all those eyes, the market break it. So when the market break this eye with a candle, so we wait for what we wait. You can see the market first make a false leg right here. The market make a false leg right here. So after the market make a false leg right here, it do what? It make another leg, and the other leg is what? The other leg is you don't break this don't break this candle right at the top. Now that is the weak right at the first leg the market make. That's the weak. Now the higher the weak goes, which means the higher the market make. The candle, the second leg candle literally don't break the first leg. So which means that there's a probability that the market is going to start coming to start selling. The market is start selling to the downside. Now after we figure this out, then I mark out my idea that if possible that the market break this eye right here. The market break this eye, the first leg that the market make. If the market break this eye, then it will surely start selling right at this top right here. That's why I marked that area out. That's the key zone. So after I figured that out, that's majorly on last week. Then now this is where the market open. This is on Monday. So this is where the market open. So let me zoom in so you guys can see it a lot more clearly. Let me zoom in. So this is where the market opened for this week. This is where the market opened for this week. This is where the market opened. The market opened somewhere around here. The market opened. So when the market opened, now we have to we have to first figure out the key zones that the market where the market reacts to. So after figuring that out, then you figure out that the market this is the key zone. This is the first key zone the market make before break this zone out. So now this is the second. This is the zone right here that the market make before breaking this zone right here, which means the market is creating lower high. This indicates that the market is selling. And the market is selling. So after I figure that out, then we do what? We drew our trend line. You can see this is our trend line right here. You can see our trend line. Now let me switch my time frame so you guys can see it a lot more clearly. So sorry. So let me do the adjustment for it so you can see is a lot more clear. You can see the market is creating something we call lower low, lower high, lower low, lower high, which means that the market is what? The market is in downtrend. Creating something we call this let me draw it out. The market is what? Creating something we call this lower low, lower high, lower low, lower high. See, that's what the market is what? That is what the market is being making. So now this is the what? This is the lower low the market make for creating this lower high, and what? And this low was broken. This low was broken. So we mark that we marked out that low right here. We mark that out. Then the market retraces back to this this lower low, this lower low right here. Then we took the trade and we run into what? We run into a profit. Normally that's the last week trade. So I want to quickly show you guys today's trade without wasting most of our time. Now when the market open with a what? The market open with a method candle right here. With this, when the market open, it literally come to what? Come to this low right here. When the market come to this low right here, you can see there's a multiple sorry, let me use this drawing for you guys, so it will be a lot more easier. It will be a lot more easier for you guys to quickly understand what I'm saying. So I want to use this. I want to just find this drawing. Where it is. So I think this is it. So that's not it. Let me use this this area right here. Let me use this. Now you can see this is the highest the market make before what? This is the this is lower high the market make. This is lower low, this is lower high. This is the retracements for the market before what? Before switching to the what? Switching to the downside. Now if you got that out, we took this trade, and we first have an entry right here, that when the market come to this area, the market shoot to the downside, but not reaching our TP before this momentum candle occurs and take us out. This trade was what I opened the trade and I sleep off. So when I wake up, I check the trade and I figure out that the market's already running into a profit. But you can see something right here. The market almost reaching my TP right here. You can see that is this right here. You can see the market almost reaching my TP right here. Before switch back to the what? Before switch back to the top side, and that take me out of the trade. But this is the trade that we first took on Monday. The trade that we took, and it run into massive profit. Now this is today's trade that we took. This is the trade I literally want to talk about mostly. So you can see something right here. Now this is the what? This is the lower low the market make before what? Before this is the low that the market break. This is the low that the market break before what? Before trending what to the top side again. Now, and this is what? This is the highest the market. This is the highest the market go before what? Before breaking this what? Breaking this low right here again. Now we have already drawn our what? We have already marked our. We have drawn our trend line, and we have already marked our key zones where we figure that the market might what? The market might likely what? Might likely come back to and start what? And start selling to the what? To the downside. Now after we mark all that area out, now we call something psychology levels. These psychology levels are what? Are the levels that they what? They are where the market might likely retreat back on. So I marked that area out. I marked that area based on my own style, which is 50 pips. I mark that area out, which is between 50 pips, and then you can see this is the key. This is the psychology levels of this trade right here. But the market usually don't come to these psychology levels, which is what? This is the highest the market goes before you come to the downside. This is the highest the market make. Now what gives us the chance to enter this trade is that the market do what? The market creates something we call let me switch my 15-minute time frame so you guys can see it a lot more clearly. The market creates something we call triple top. You can see the market creates something we call triple top. This is how the triple top look like. This is the first leg, second leg, and the third leg. This is called triple top. Now you can see we have everything right here. We have everything in place right here. This is the what? This is the low. This is the low the market will make before changing to the top side. Now this is the first leg. You can see we have the first leg, we have the second leg, and this what? And this is the third leg. And that third leg is what? Is at the trend line. It's at the trend line. It's at the trend line. So this gives us what? This is what the chance that the market is what? That the market is going to what? Is going to shoot to the what? To the downside. So when the market make that, when the market create that triple top, when the market create that triple top, we then mark out this area. You can see something. You can see something right here. We mark out that area. We mark out the area that we are expecting the candle to close above that this area right here. You want a candle to close above that area right here, and when candle close above that area, which is this momentum candle, then we take our trade. We take our trade, and you can see this is a 3.77 risk and reward ratio, which is almost 1:4 risk and reward. This is a 1:4 risk and reward ratio, guys. You can see this credit trade, which means that if you are risking, let's say we are risking 20. We want to risk $10 per entry. We are aiming to make we are aiming to make $4 in profit. So which means if you risk $10, we are aiming to make $40 in this trade. Which means if we reach $100, we are aiming to make $400 in this trade. So that is this guy. That's how I took this good trades today. Now I have a lot of strategy on how you guys can be profitable trading good index, good pairs. So if you want me to be creating a lot of strategy on how you guys can trade this gold effectively, to be killing this gold, making a lot of profit day by day, and if you want me to get to do that, just comment down below. And like this video, subscribe to my channel if you have it. So I'll be creating a lot of strategy, a lot of video on how you guys can trade this gold effectively, guys. Now let me show you guys the GBP USD, the GBP USD setup that we took before in the London Open. So let me quickly start from the higher time frame, so you guys can have better understanding about it. Now the same thing applicable to the gold movement. You can see the market is an uptrend market. It's an uptrend market, which means that the market is creating something we call moving to the top side. Now let me do it this way so you guys can see it a lot more clearly. So you can see it right here. The market is an uptrend market. It's an uptrend market. So when we figure that the market is an uptrend market, now you can see something right here. This is the highest the market go. This is the highest market go before start selling, before that the market can trending to the downside. Now this is the key levels. You can see it right here. Now after the market break these key levels right here, it retraces back to that area it retraces back to this key zone right here, and then come to the downside, and then come to the downside. Now we have to mark that area out. So you can see we have our horizontal line right there. Now this is the lower low the market made forward before creating this higher high right here. Now this lower low was breaking, and that is what we are expecting the market. We are expecting the market to do like this. So that shows that the market is a downtrend. It's a downtrend market. So when we figure that out, then we mark out that area as well. Now I took this trade last week because I expect the market to retrace back right at this low right here, and then the market did. Then I took the trade and I make let's see $500 plus in last week with this GBP trade only, and then now let me, without wasting much of our time, let me quickly show you guys the trade that we took on GBP today. So now this is it right here. This is the trade that we took. Now, after the market creates lower low right here, creating this lower high right here, I mean, now this is the low that the market make before what? Before creating this lower high. This low wasn't broken by this momentum candle, and then we are expecting market to do what? To come back to this low, and then what? And then we are expecting to go for sell. But when the market trades back to this low right here, it break this low right here, breaking this low. Now the market break this low right here. Now after the market broke this low with a momentum candle, then we have to figure that the market might be start trending to the top side. But what the market did is that when the market did is that the market start creating. Now let me show you guys a lot more clearly on 1 hour time frame, so you guys can see it a lot more clearly. So you guys can have better understanding that 4 hours can be somehow tricky. So let's switch to our 1 hour time frame, so you can see it right here. You can see this is right here. You can see this is right here. Now in the market, when this market creating this lower low right here, creating this low that creating this low, then creating another lower high. So which means the lower that it creates is what is right at this lower low. It's right at this lower low right here. You know that we have already marked out everything with this horizontal line right here. We have already marked out everything. Now when the market shoot back, turn back to this, come down to this top side, come down to this area right here, then the market do what? Then the market is what? Create a multiple candle right at this area, not giving us a clear entry for this trade. Then you can see this candle, this green candle, then break then shoot back to the top side, breaking taking all this candle out, taking all this small candle out. Then after it take that small candle out, you can see the market then come back to this low right here. This is low right here. Now when the market comes back to this low right here, we eventually figure that they say coming up in the market. Now then after we figure that out, then we enter the trade with a 1 to 3.5 risk and reward, which means if you are risking $100, we are able to make $350 profit. Now this is our entry time frame. This is where we took the entry. Now what give us the prediction that the market is going to shoot to the downside. You can see something right here. The same thing that the market make on gold, it then do it again on this on this GBP USD as well. You can see this is it right here, creating a triple top right here. This is Monday trade. This is the explanation about Monday trade, just yesterday's trade. Yesterday's trade. So we took the trade and then we don't trade massive profit. No, this is the today's trade that we took. This is today's trade that we took. This is today's trade that we took. Now you can see something right here. You can see this is the highest the market goes before it shoot to the downside. So I've already draw this out, but it didn't save up. So this is the highest the market make before the market shoes to the top, to the downside. So the downside is the highest the market make before to the downside. Then we mark out that area, which means that's a liquidity area. Some the other block traders call it a liquidity area. That's the liquidity area. Area that we know that if the market comes to that area, it will surely react at that area. Now that we figure that out, how do we now enter the trade? Now we have a multiple confirmation with this entry right here that give us that the market is going to shoot to the downside. Now this is the fourth confirmation that we see. Now you can see when the market come to this zone right here, the market then start creating a weak rejection right at this area, and then we figure that a black candle closing above this candle right here. You can see a close above candle right at that area. You can see a close above candle, which means that which give us the probability that the market is going to shoot to the downside. Now that gives us the probability that the market is going to shoot to the downside. Now and then you can see when the candle close above that area, then we enter the trade and we go for our 1 to 3 risk and reward ratio, probably 1 to 3, or this is our TP area. This is where we are expecting the market to come to. You can see that's our TP area. We go for 1 to 3, yeah, exactly. We go for 1 to 3 risk in reward ratio, and then you can see the market going into a profit with the trade. Now you can see we have a multiple trade right here. You can see when the market broken this area with this momentum candle, it then retraces, and then it retraces back to this area right here, to this area, this candle that broken taking all these weak candles out. Then market come back there and shows a candle we call shooting star. This is the candle called shooting star. This is that candle right here. This candle right here. This candle we call shooting star. So that candle give us the time that the market is this market is is a downtrend market. Then we enter another trade, and then we will also go for 1 to 3 with this entry right here, and then we go for 1 to 4 risk and rewards, guys. That's how I took this trade out, this GBP USD trade and the gold. That's how I took this trade out, guys. So that's it, guys. I have a lot of strategy and a lot of skills that I normally use to trade the GBP USD and the gold, because that's the way I'm that's the page that I'm good at. That's the page that I'm good at. So I trade this GBP USD and the gold, especially the gold. So I trade gold most of the time. So guys, if you want me to keep creating a lot of strategy and a lot of videos like this, and a lot of strategy you can use to be making this GBP USD and the gold. If you want me to create a lot of strategy, you can use to trade and a step-by-step process. You can use to be making this market. Make sure you like this video, subscribe to my channel, and then turn on your post notifications. So anytime I post strategy, you guys will be aware. Thank you guys, and we talk to you soon. I'll see you in the next video. Bye.